Just like this example, I solve this example and record how to record double entry by using the business transaction. So this is the example of 2.3, and the example I solve, it's belong to assets and liabilities, and the second example which we will solve, that's belong to the expense and income. This will be your homework. You have to record double entry and send your working to me. So the next step, the next things you have to learn, that is the ledgers. So all financial transactions involving the business are recorded in a format called ledger or an account. So after the double entry system, I will record all double entries into some format. That particular format also called the ledger or an account, or in simple word it is normally known as T account, because it's the format of account is look like T, the alphabet T. So that's why this account is also called as a T account. And the recording of double entry, this is the first step, that is called business transaction. So this is the business transactions. So from business transaction we'll record double entry. So these double entry also called journals. Journals mean recording double entry. In journals, I will record business transaction into debit and credit form. These journals are double entry. So from double entry, from journal, we will move towards the ledger. Here is the ledger, also called T account. So here is the all roadmap from where we start accounting and what will be the our ending point. So here is the criteria. So in the top one, in the top list, there is a business transactions. So from business transaction, we will make double entry. That is called journal. Journals. So after making journal, we will make ledgers. Ledgers mean T accounts. Then afterward, from ledgers T account, we will make trial balance. From trial balance, we will make two main important document in our accounting. The first name is statement of comprehensive income. From trial balance, we will make two important document. Number one is statement of comprehensive income. Statement of comprehensive income, also called trading profit and loss account. Trading profit and loss account. also called in simple word income statement. So here is the alternative of one thing, income statement. And the another important document we'll make from the trial balance, that is called statement of financial position. Statement of financial position. Financial position, also called balance sheet. Balance sheet. So this will be our entire accounting. We'll start from the business transaction, number one. In second stage, we'll do double entry, that is journal entries. In the third stage, we will make ledgers. In the fourth stage, we will make trial balance, and from trial balance, we'll make two important documents. Number one is statement of comprehensive income, and the second important document is statement of financial position. So now we'll talk about what is the ledgers. It's the ledgers. Any problem in this area, you can ask if you have any question. Yes, students, any question?
No.
Okay. So from this double entry, we will record the second important document, that is the ledgers. So number one is business transactions. From business transaction, we made journals, and from journals we made trial balance. What is the second name of trial balance? Oh, sorry, that is the ledgers. And the third one, that is the ledgers. What is the second name of ledger? T account, because we'll open the account in the form of alphabet T. So how many ledgers we will make, it depends upon the nature of transaction. How many different transactions we can trace from this to this? How many different transactions we can trace? So we have ample of different transactions. So bank is different accounting head. So we can count this. Number one, we will make bank account. Second, capital account. Third, furniture fixture account. Bank already open here. Cash, here's the new account. Cash will be new account. AB loan will be the fifth one. Motor vehicle the sixth one. Bank already open. Cash already open. Malaika, the another payable person, that is 7. So we will open total 7 T accounts that collectively called the ledgers. So we will open the 7 different ledgers. Number one, bank, capital. So we will open here. So here is the first ledger, that is the bank ledger. Second one is capital. Third one is fixture and fittings, 3. 4, 5, 6, and the last one is 7. So here is 7. What's the name of first? Bank account, capital account. So number one is bank account. Second one is capital account. Third one is fixture and equipment. Third one is fixture and equipment account. Fourth one is cash, AB, loan payable. Cash account, AB, loan payable account. Next one is motor vehicle and Malaika loan payable. Motor vehicle and the last one account loan payable, and the person name is M, loan payable. So we have 7 different accounting head which we write here. So now next is the we recording from, we posting from double entry. We'll write accounting heads information from double entry into ledger. So writing business transaction, writing information from journal to ledgers, that is called posting. Recording information from journals into ledger is called posting. So we will post information taken from journal and post it into the ledger T account. So the first information is bank is debited against what account, which accounting head, that is the capital. So bank is debit, so in the debit side of bank account I will write 80,000 against which accounting head, that is the capital. So here is the ledger, it is the debit side, credit side. The left side of the shape is debit side and the right one is credit side. Left side debit and the right side is the credit side. Debit, credit, debit, credit. Now we record every debit and credit information. So the first entry will be bank account is debit, so in the bank T account we will write 80,000 in debit side against capital. So we'll write $80,000 against which head, that is the capital. What does it mean? Bank will increase against capital. So bank debit, capital credit. What does it mean? From T account we can make double entry. So if we write debit side of a bank, it's mean bank is debit against which accounting head, it's mean capital. So if bank is debit, it's mean capital is credit. So in the capital account we will record 80,000 again against which accounting head, that is the bank. So bank debit 80,000, capital credit 80,000 against the bank. So here like this, capital, if we record this transaction from here to ledger, we transform from journal to ledger. So capital is credit, we will write 80,000 in credit side like this one. Because capital, nature of capital is credit, we record 80,000 capital side against which accounting head, that is the bank. So this double entry will automatically complete. The second entry, fixture and equipment debit. So we will record 30,000 on debit side. 30,000 on debit side against which accounting head, that is the cash. Here is the sorry, bank. 30,000, not cash, it's bank. So if fixture is debit against bank, it means bank will credit against fixture. So we'll write 30,000 against fixture and equipment. Against fixture entry. And the third entry is cash debit, AB loan, credit. Cash debit, we will write 10,000 on debit side of cash debit 10,000. So cash debit by 10,000 against which element? That is the AB loan. So if cash debit against AB loan, it's mean AB loan credit. AB loan will credit by 10,000 against cash. It's mean we receive 10,000 from AB is the person. Second last entry is motor vehicle debit, bank credit. Motor vehicle debit, we will write 9,000 in the debit side of motor vehicle. Motor vehicle debit side, we will write 9,000 against which accounting head? Against bank. So bank. So it's mean motor vehicle debit 9,000 against bank. It's mean bank will credit against motor vehicle. Bank will credit against motor vehicle by 9,000. So we write vehicle. And the last entry will be cash debit, or Malaika is the person from to whom Mr. Business took loan. Cash debit 5,000. We will write cash debit 5,000 against Malaika loan payable, or is against payable. So cash debit and the Malaika account will be credit against cash. So I will transform all accounting entries from business transaction to ledger. So it's time to close the account. So it's time to close the ledger. How we close the ledger? We will total the debit side and credit side, and beside is lesser, we will write the balance over there in the lower side of the account. So here is the total account is 80,000, and here is the total side will be again 80,000. But this is the 30 plus 9, 39,000. But I need total 80,000. How can we write 80,000? It's mean we will write some balance here. We will write some balance here. So the balancing value, balancing figure will be right here. To balance debit and credit side will be equal to equal the debit and credit side. We will balance the balancing. We will find the balancing figure, or we will balance the amount which has lower side. So credit side will be lower, that is the 39,000. What will be the value if we subtract 80,000? Subtract 80,000 minus 39,000. What will be the remaining answer? The student can tell me. 80,000 minus, yes, the remaining amount will be
68,000.
41,000. Remaining amount will be 41,000. So 41,000 will be the balancing amount. Can you get this point, Mike? So if we add 41,000 plus 9,000 plus 30,000, the answer will be 80,000. Get it, student?
Yes.
Okay. Another one thing you have to remember this stage, 41,000 is the debit balance. It's called debit balance or credit balance. What will you say? 41,000 is the debit balance or credit balance? So it's a debit balance because debit side is heavier. Debit side is heavier. So this 40,000 is the debit balance. Okay. So we have to close this account. The double lines, this double lines mean we are closing the account. So here is the 80,000. So there is no value here. So there is the balancing amount. Balance. We can balance. That is the 80,000 here. So we can write 80,000 debit side and credit side equal. So this 80,000 balance is called credit balance because credit side is heavier. Get my point?
Yes.
Okay. So fixture and furniture account, we'll close this account. The balance will write here, that is the $30,000. This balance called debit balance, credit balance. Yes, student. Debit balance because debit side is heavier. Now balance the cash account. 10 plus 5, 15,000 debit total and 15,000 will be credit total. The balance will be here, that is the 15,000. So debit. What does this balance mean? It's mean business has 15,000 in hand. Balance 15,000 mean, it's mean business has 15,000 in hand. So close this account. $10,000, balance is 10,000. So it's mean it's a credit balance. Now close the motor vehicle account. So the balance is 9,000. So this balance is called the debit balance because debit side is heavier. And the last balancing account is the motor vehicle. 5,000, and the balance will be 5,000. So this 5,000 debit balance, credit balance, because this is the credit balance. Okay. Can you get my point? So this is the ledgers. This is the ledgers. Any question at this point?
No, sir.
Okay. Now this is your homework. You have to write by using this business transaction. You have two requirements. Number one is prepare journals, prepare journal entries, and the second one is prepare all relevant ledgers or T account. Take the screenshot of this question. It will be easier for you to solve the question. So it's enough for today. You have to solve this question and send it to me. Now we are going to end this session.
Okay, sir.
Take care of yourself. Allah Hafiz.